This week's jobs report is going to matter more than you think. My name is Blake Morrow, and you are listening to the Week Ahead video. I'm so glad that you're here. Before I actually get into it and all the things I want to discuss about this week's market, talk about what's happening next week. We got a couple central banks, the jobs report, all that other stuff, and what's going to move and what could potentially move. And then you're also going to hear from Nick from Trading Analytix. If you like these videos, make sure you give us a thumbs up. It is free to give a thumbs up. It's also free to subscribe to this channel so you don't miss these videos. And it's also free to comment down below. If I miss something, I tend to miss things on these week ahead videos. I try to get every bit of detail, but sometimes I do miss things. So if you have any comments, please jump down below and give them to me. Now, I want to talk really quick before we get into all of that. I want to talk about the taco trade. And, this is something that's gone around this week. If you don't know what the acronym TACO stands for, well, Donald Trump during a press conference, one of the reporters was asking about TACO, the acronym TACO, which stands for Trump always chickens out. Ooh, that's a hard one to do with, you insult President Trump like that. He doesn't like it. We knew that earlier this week. We knew that he wouldn't like that. We knew there would be a response. The response, well, obviously during the press conference, he was defending. But today on a Truth Social post, now let me see if I can, I'm going to take you over to the ForexAnalytix chat room. We have Giphies. We'd obviously talk charts. I'm going to scroll through, like this is earlier today. By the way, this is Friday. There was a Truth Social post, and I'm not sure if it was posted here because I was on air at the time. So let's see if it is. Actually, let's see if it's put in our news and research room. Oh, it is. Okay. So in our news and research room, you can see it right here. This is what Donald Trump was discussing, or what he did today in response to all this. Oh, let me get rid of myself here so you can actually read it. He was talking about basically defending himself against China and against his actions in China, rather. And also saying that I had to make a fast deal to help the Chinese economy. That was, what his reasoning was. But he also goes on to mention that China has totally violated its agreement with the U.S. So much for being Mr. Nice Guy. Now, the reason why that's so important is because the price action today. Now, let me explain to you what I mean by that. And again, this is the ForexAnalytix chat room. I'll talk about what you have access to when you're in the chat room. Well, you have access to everything when you're a ForexAnalytix trader. You can actually see what trades we're in. You can see, that I shorted the dollar Mexican peso at 1942 about an hour ago. And currently it's trading at 1937 after 1 hour. I shorted it right up here, and you can see it's dropping. Again, if you want access to this type of information, you just have to be a ForexAnalytix subscriber. We'll talk about that in a few minutes. But the reason why I want to talk about the taco trade is because if you watch the price action, soon as he said that, all right, what happened? Let's talk about it. The stock market immediately, this is the futures. This is what happened. The futures went down, and then about an hour later, the futures had recovered everything following that. So what does that tell you about the taco trade? Trump always chickens out. What that's saying is the market told us exactly how it feels. It says, you know what, President Trump? Prove it. You're not a chicken. Because until proven otherwise, your actions are going to speak louder than words. And so we are going to recover because, I don't believe you. I don't believe you're going to pull the trigger. Now, I don't agree with that sentiment that the market has. I believe that the warnings that you got here from President Trump should be taken seriously. And I'll go again to the Truth Social post. I think it should be taken seriously. And I think that there is risk over this weekend. I know you guys are watching this over the weekend, that maybe some action is done on China. And it's one of those things about Donald Trump is I know he doesn't like to be, I've been watching him professionally for about 30 years now, being in the markets. I've watched him ever since he was a young real estate developer. I've seen him on CNBC probably more times than 90% of you. And I've watched many interviews of him over the years, not recorded. I'm talking live while it's happening. So I've been watching this gentleman, our president, over the last almost 30 years now. And one thing I know about President Trump, and I'm sure you all are very well aware, he doesn't like to be cut down. He doesn't like to be made fun of. And he will prove a point at the expense of the U.S. economy, the global economy, just to make sure that everybody knows that he is not a chicken. So I think the risks are out there, and I think the markets are inappropriate or unassuming at this point, and I think inappropriately unassuming that nothing, or assuming that nothing's going to happen. That's what I meant to say. Anyway, it's late in the week. You guys have to bear with me. It's Friday. The markets are still open, and I'm getting tired. I'm towards the end of my rope at the end of the week. But I think the markets should be prepared for some sort of risk event, whether it's revamping up Chinese tariffs, whether it's doing some other action, and it makes himself not look like a quote unquote chicken. Anyway, I wanted to talk about that because I think it's really important that we understand how the market is reacting to these headlines. But I think they're assuming the best, which the market is always a glass half full instrument, at least 90% of the time. So I wanted to talk about that. Now, one of the things that we got this week also I'm going to discuss before we actually get into the charts, I want to talk about the US dollar volatility. If you guys didn't see it, the courts, federal trade courts, ruled on the IEEPA, which is the Emergency Act, basically saying that Donald Trump could not, it was illegal that he did that. The dollar index it just ripped. And now this is, the dollar index is closed. It's an index that's traded in futures. So it closed. Well, when it reopened, the dollar, because it happened, during the dead hour of the markets, even though markets are open 24 hours a day, when the futures closed, it gapped up. But look what happened immediately. It sold off. Now, that type of volatility is great. We love volatility as traders. That's what we thrive on. But what this is telling us as traders and investors is the market is increasingly not interested in holding dollars. Even though that news should have been very, very good for the dollar was sold off. Now, you could argue, say, well, that's because, Trump, Trump has other levers he can pull to make tariffs happen. This is true. This is very much true. And I think that's one of the reasons why the dollar slid again. But the other reason that doesn't get talked about a lot is just the diversification aspect of, institutions, funds, sovereign funds, banks, big banks, countries, reserves, wanting to reduce exposure in the dollar because of volatility. And that's something that doesn't get talked about enough, but I think is something that's going to end up weighing on the dollar quite substantially unless something dramatically changes. But right now, holding dollars is a risk for most big institutions, most banks, most countries. So they will continue to hold dollars, of course, but will they continue to hold a higher percentage, or will they trim their percentage of holdings? I think that's what's happening right now. The dollar, as I've argued on many points over the last few weeks, the dollar is still the reserve currency. It was the reserve currency when the euro was at 160, at 130, at 120, and where we currently trade today at 113. Is it losing its reserve status? Yeah, you give us an option. Give us an option. We could see it shift away, but right now there isn't very many options. But there are options to diversify, and that's why the euro continues to have an insatiable bid about it, despite, I know some of you would argue, being Europe. So, with that being said, let's get started with the week ahead video. Now, you guys can follow along on your calendar. You can see what you can just adjust the dates and follow along. On all the events that I'm going to be talking about. But I do want to talk about the things that are happening this week and how they might be moving the market. Now, the first thing is going to happen on Monday is we're going to have ISM. It's a jobs report week, and the jobs report, like I said earlier, it's going to matter. And what's also going to matter is the ISM data that we're getting. So the ISM that you get from your services sector, which is going to be on Monday, it's going to be a driver of action. All right. So the first thing I want to do is I want to talk about the euro. And I know I was just showing you that chart, but the thing about the euro is the sell-off in the euro that we saw this week that sell-off, it was enough to actually get me out of my longs because it happened during, you know, the slow period in the Asian hours. I already re-entered long in the euro, so it doesn't really matter now. But I closed out my positions initially. And how many bigger institutions? I'm a retail trader. I'm fast. I'm nimble on my feet, you know. But how many institutions got stopped out and they have to get back in? Well, the fact of the matter is, if you look at the euro just overall, the euro's had a very, very minor pullback. If you take this low right here over to its highs, you notice that we've only retraced 38% retracement. Now, when you're talking Fibonacci's are a very my most useful tool in my toolbox. Something I've been using for nearly 30 years. I started studying Fibonacci's in 1996, 97 actually. So the thing about Fibonacci is, one thing I know is when you have such a shallow pullback to a 38% retracement, the risk is a continuation. So in this case, it would be a continuation higher in the euro, as long as we stay above 110.50. Now, also, if you don't know this, not only is that a big deal, but if you go out to like a monthly chart, let's go over to a monthly chart. There we go. And you take that high way back here in 2008, and you go from the high all the way through the low here. You'll notice that what we did is we actually pivoted right off of that broken trend line at the 110.50 level. So that 110.50 level is really important for the bullish outlook in the euro longer term. Remember, I'm looking at a monthly chart right now. Okay. So ISM data comes out on, and you know what, I'm going to take you over to charts that we draw on all the time. ISM data is going to be important, and the euro is going to be ultimately very important here at the 114.20 level. Now, why is that so important? Let's discuss a few things. I'm gonna do a little deleting because you guys know I wanted to be long down here because the risk reward is great. Being long, the euro has paid in spades over the last couple of weeks. If you are watching this video on a week-by-week basis, you know I've been a consistent euro bull for the last couple of weeks on this dip, and I wanted to be a buyer right at that teal trend line, which we hit. That was reviewing one of the trade setups 3 weeks ago. By the way, on this video, I will give you the top 3 setups for the week, and I will review last week's setups, so make sure you stick around at the very end of the video for that. Okay. So why is this level so important here? Let me share with you, and let's get rid of these fib levels, and let's get rid of this blue line, and we're going to keep this underside of this trend line because it has been capping the market. That's one thing you have to be very respectful of. But if you go from high here to low, you'll notice that we are stopped near the 618 retracement. That's what's holding us. So if we can get above these levels, like the 113, oh yeah, and then one other thing I wanted to draw for you. I'm gonna hat tip Kyle in the ForexAnalytix chat room for bringing up that trend line last night when we were up here at 113.80. So Kyle, he's a new trader in our ForexAnalytix chat room. Kyle, hat tip to you, my friend. So that trend line's pretty important. So if we start getting above that, yeah, I wouldn't want to be on the short side. ISM data coming in on Monday. Monday night, sometime it's unscheduled. Ueda, that's Bank of Japan's Ueda, the governor, is due to speak at the Research Institute of Japan in Tokyo. So we gotta have awareness when that's happening. Again, it's unscheduled, so we'll be looking for headlines. Tuesday, so we have Swiss CPI, and then we have our JOLTS data here in the U.S. So JOLTS jobs data. Now, the dollar Swiss is interesting. And the reason why I say it's so interesting, let's get rid of this really quick. And let's talk a little bit more longer term. See, longer term, I think the dollar Swiss is developing and has developed a bear flag pattern that looks a lot like this. Now, what you'll notice, and by the way, if you are a ForexAnalytix subscriber, every single morning, you and I, we build the bias chart together. I've been doing this with traders that I've been teaching since 2001. We used to call it a T-chart. Now we call it a bias chart after about 8 years ago. So we do this every morning, live. I get these numbers for you. We draft this out. This information is available to you every day. A lot of our traders in our community trade right off of these levels because they know they're important, because we went together through the charts one by one and found these levels together. Well, every day for the last 2, maybe 3 weeks, we've written down this number, 81.90, which is right here.
Webinar
and
online.
It continues to hold as major support. But if you're talking in bear flag terms, a breakdown below there would be bearish. Now I know some of you might go, well, Blake, that's a head and shoulder pattern. Let me show you, Blake. There's a head and shoulder pattern. There's a shoulder, head, shoulder. It's a head and shoulder pattern, right? So it could go down. Oops, I didn't want to do that. Let me switch that back. Whoops, let me switch that back. Okay, let me switch that back. Dang it. All right, let's go back like this. Back. There we go. All right, so everybody says, oh, Blake, that's a head and shoulder pattern. Let me do that one more time. And that could break down, right? No, continuation patterns are not head and shoulder patterns. Head and shoulder patterns are reversal patterns after an elongated uptrend or downtrend. That would be a continuation pattern lower. So no, it's not a head and shoulder pattern, but will it still work like one? The answer to that question is yes. But if you look at markets like that and you don't realize that head and shoulder patterns are not, they are reversal patterns and not continuation patterns, then I suggest you go read the book that's in, it's like 20th edition, the Williams and McGee, the Bible of technical analysis. It's going to cost you about $80 used, but go get one and then go read. And then it's the Bible that we all pray to. Even if you're not a religious person, you're probably a religious trader in that respect. Anyway, so, but will this be a bearish breakdown? Yeah, it's going to be a bear flag breakdown. So keep an eye on the Swiss, especially with Swiss CPI. If inflation is hot, we could see some downside risk in the dollar Swiss. That's on Tuesday. Tuesday night, we have Australian GDP. Now, you look at the Aussie, and the Aussie is in this really, really tight trading range. And it tried so hard to break out the other day. But it looks like more of a wedge. Now, there's obvious reasons why the Aussie is stuck, because it's being pulled in two different directions. One direction is China. China is really slow. The demand's going to be slow, and what the heck is going to happen with China with this trade war that the U.S. is having with it? So no one wants to buy the Aussie for that reason. But on the flip side is no one wants to really buy dollars, for all the reasons why I've explained to you earlier. So that really puts the Aussie in a really tricky position. Does it break out? Does it break down? I don't know. Will it do it soon? I think so. And when it does, is it going to be a big move? Yeah, I agree. But Aussie GDP, I don't think is going to be the data that does it this week. Wednesday, ADP jobs report, the private sector jobs report matters this week more than anything, because the market is really concerned about the growth prospects of the U.S. And the number one driver in growth for any economy, it's when people are working. So we're going to be carefully focused on the ADP data and ISM services data, since the U.S. is a services economy, will be out on Wednesday as well. Now, one of the other things that is happening on Wednesday is we have the Bank of Canada rate decision. Now, a couple of weeks ago, I said, you get to the 78% retracement, you can play it for a long. Well, that happened. Several weeks later, we obviously haven't looked at the dollar CAD. One thing about the dollar Canadian that you'll notice here is, as we're making new lows, relative strength is not. Do you guys see that? Now, that doesn't mean it's not a short, but I'll tell you, I'm not comfortable trading the dollar CAD right at this very moment in time. Now, will it eventually develop into a better trade? I think so. What I'd rather do is I'd rather be on the short side in the dollar CAD somewhere up here and be on the long side of the dollar CAD somewhere down here. Just because I happen to be bearish Canadian dollars, but I'm more bearish the dollar, US dollar. So therefore, dollar Canadian is feeling some downside pressure. Okay. So we do have the Bank of Canada rate decision on Thursday. By the way, as we're speaking, the S&P is hitting fresh lows right now as we're speaking, and take a look at it. We're hitting fresh lows on the session, And let's see if there's any headlines that have come. Oops. That would be no. It's just more of, it's Friday. It's at the end of the month because this is the last day of the month. So there's nothing really driving this other than end of month flows for the dollar or for the S&P right now. So don't worry, I'm going to come back to the S&P. I just wanted you guys to know we are actually hitting lows of the session as I am recording, and it's not looking pretty. Wednesday night, really important. We have the yen or Japanese 30-year bond auction. Now, why is that important? Well, it's important because we saw a 30-year auction or 40-year auction in Japan go very, very poorly this week, and that spiked yields higher earlier this week. Okay. Now, since then, things have kind of gotten tame, but these auctions, not only in Japan, but in the US, in the UK, yields are rising globally. And if these auctions continue to disappoint, that is going to usher in some selling in equities, in my opinion, globally, not just concentrated in the US. I'm talking globally. All right. Thursday, we have the ECB decision. Now, the ECB is expected, let me confirm this, they are expected to cut rates, but have they hit neutral? And are they going to hit neutral? And, I have a feeling that the ECB rate decision on Thursday could end up being a very big mover. And if you're looking at the euro, you guys, since I've already done analysis on this, you guys know that above this trend line, above 114, it gets pretty bullish. Now, obviously, a drop below this week's lows, which is 112, would be a very bearish event, in my opinion, in the euro. That means we'd revisit this trend line, that teal trend line. If you guys remember, we talking about it, that multi-year trend line, that one. We will retest it if we break this week's lows, which comes in at 112. All right, so the ECB is on Thursday. Last but not least, Friday. We got the Friday jobs report. We have the Canadian jobs report. I already showed you the dollar CAD. I also already showed you the dollar, but I do want to reiterate. In the dollar, we are in a bear flag pattern. This is the same dollar index that we use for all the shows. This is the same that you would see in the dollar index on ForexAnalytix. You can see this chart is the exact same chart as this chart. That's because when I'm doing analysis, which I provide analysis every night for these 30 instruments, not just currencies, but Bitcoin, dollar index, crude oil, it's all found on basic technical analysis. You're going to see my charts that I'm using every single week. All right. It's the only shared chart that we have, or there might be two shared charts. I think the US 10-year yield and the dollar index that I share with this video and our daily charts. The reason why is because this is a universal chart that I use for pretty much everything. But you see how we're in a very bearish trend. We're still in bearish breakdown territory. The move back above 100 couldn't even hold. So if the jobs report disappoints this week, the risk would be that the dollar index trades back below these lows and we start to challenge the 98 level in the dollar index. And remember, there has been a lot of job cuts and employers are getting increasingly concerned about the economy and employment. So it's just a matter of time before these jobs reports start showing us some negative numbers. I don't know if this month is going to be it, but is there room for disappointment? I think there is. And so keep that in mind as we navigate through this week, through all of this data. Now, I do want to mention, I talked a little bit about ForexAnalytix. Look, we've brought down our prices ever since we had Liberation Day. We have what's called the Liberation Offer. We never have cut our monthly, we never actually discount our monthly subscriptions. We never have. In 8 years of existence, we've never done it until Liberation Day. We call it the Liberation Offer. We know prices are going to go up globally. We understand that. You're going to suffer as a result. I'm going to suffer as a result. So we, as ForexAnalytix, are doing our best to help out. We've knocked our subscription down by 40%. We've never cut our prices on a month-to-month basis. Annual subscriptions, yeah, we've done it before. Semi-annual, yes, of course. But on our month-to-month, locking in low prices, never done it. This offer goes away this weekend, so take advantage of it. It's been out. We've had it up for a couple of several weeks now, and it's time for us to take it down. So this is your last chance. Today, you should get involved in ForexAnalytix. Not only will you have this wonderful tool, that you have all of these different news feeds, risk management calculators, live squawk. You have our chat rooms where you can go and talk to like-minded traders, see how everybody's viewing the pound or the Kiwi or the taco trade. Or that's actually pretty funny. That's got to be AI generated, but that is pretty funny. That's the first time I've seen that today. Or when I was looking at the EURUSD earlier today. If you want to chat with like-minded people, this is the most active community you're going to find. That's secluded. It's private. We only talk about markets. We don't talk about politics. We don't talk about religion. And we don't sell any other products. Because if you do any of the three of those, you are kicked out. So check out the ForexAnalytix community if you want a nice, wholesome trading. And we do talk about Netflix movies every once in a while in the summertime when it's super slow. And we do talk about the World Cup games and champions, the champions finals that are this weekend. That might get mentioned too in the chat room. So if you guys are sports fans, you'll be right at home. But really, it's for $3 a day. There's no better place to be. $3 a day. Think about that. All right, guys. Now is the time I'm going to bring in Nick from Trading Analytix. He's going to talk to you about indices, about some individual stocks. I'm sure he's going to be covering NVIDIA. And he's probably looking at the sell-off right now going, oh, but I know he's filming as we're filming. So I haven't seen the video yet. I always watch it after the fact. But enjoy your time with Nick. I'll see you back here in a few minutes.
Hello everybody, my name is Nick Groves of Trading Analytix. Blake, thank you as always for passing on over to me. And now I'm going to go ahead and talk about the equity market. So we had a nice false breakout this week on that news. It looks more like this. And the fact that we have that where we had it, I think is significant. If you look at the daily chart, the S&P, and look at that wick from from the other day. We came above the 786 and it's been flirting up there. The fear is if you get back above the false breakout area, I think it will act like a magnet back up near all-time highs. The reason being is you're really not that far at that rate. You're about 2.5%, and in this market, that can happen in about 2 sessions. So something to be aware of in the event we do turn around, but I am certainly feeling like there's a chance we don't. Taking a look here, the false breakout, I would point out some support here, former resistance. That comes in at 58.44. You'll also notice that that is the 618, or at least very close to it. So we'll have to see if that can hold come Monday. But I do imagine this should be held through the rest of session. It's about 1:30 on Friday. So that is something to be aware of. Now, in the event that we break lower from here, I do imagine we challenge these lows. And overall, my target is somewhere back near this support here at 57.25. That is the gap fill. We flirted with the gap fill on May 23rd, but didn't fully close it out. So I do feel as if we can still see that happen. But overall, in the event we take out the gap fill, I think major support's going to come in between 55.70 and 56.40. Somewhere around here, you have the 38.2 pullback from the lows to highs. And then also this former trendline support that dates back to April of 2024. Certainly had a lot of touches on this line. So I do imagine that this would be big support. And I think the big question is, will we end up breaking through here if things continue to unravel? The tariff situation is getting more and more complex, which I believe leads to more uncertainty. However, there are some stats that I'd like to point out. Taking a look here at the S&P 500, once it's up more than 18% over 7 weeks, this printed on May 29th, and the 1 week later and 2 week later, you're looking at about a coin flip as far as whether it's going to go down or not. But what I would also mention is once you get through, call it 2 weeks to 1 month, it has pretty solid returns. So that is something to be cognizant of. Could we have some form of a pullback and then a bounce? I think that's definitely possible, and that's something I'm looking out for, because we have to admit at the end of the day, this has certainly worked off quite a bit of steam. You've had this ascending wedge, though, that's broken down. On shorter time frames, there's some resistance broken in ES. NQ also had a bit of a rising channel, throw over, breakdown. I find that significant. And then also in the Dow as well, another ascending wedge that is broken after a slight throw over. So will these moves continue is the big question, and I think we will find more clarity within big tech. I want to show you all the Mag 7 composite chart. Taking a look here, you'll notice it came up near the 786, and I was pointing this out in the community. This resistance line here, a previous heavily traded zone that led us the breakdown back in February. You'll notice that we came up right near it and rejected. I do feel as if the mags could be due for some form of a pullback now that we've tagged resistance. And taking a look at some of the individual tickers like Nvidia, you'll notice we came up near the 786, blew past it a bit on earnings, and has since reversed. I had this bull flag pattern drawn out, which was certainly terrifying. I'm going to go ahead and delete that, though, because it looks as if that is negated. And overall, Blake pointed this out to me. There is somewhat of a head and shoulders pattern here playing out, or not playing out yet, but developing in NVIDIA. And that would certainly be quite bearish if we decided to start moving lower. I also noticed the other day that TSM right up here had one of the largest transactions, had the largest dark pool order transaction to date in there. The question is, was this a buy or a sell? I think that's something that you all have to decide for yourselves. But it did not fully come up to the 786. It's hovering near the 618 at the moment. Could it stretch up a little bit higher? Certainly could. Now taking a look at some of the other stocks, let's take a look at Apple. Apple is very interesting to me, and I'm keeping a very close eye on it. I need to go and delete this trend line here. What you'll notice is that Apple has been pretty much range bound since April. It's just been stuck in this range in between 190 and 215. So I would definitely have that alerted up, because in the event we take this out, I think basically Apple is a good indicator of China in the US because of the amount of business done there. So in the event that these lows are taken out, it could be a bit of a canary in the coal mine effect. Conversely, if it takes out 215, this market could catch some steam higher, and that all-time high scenario could play out. I do feel if we get towards all-time highs that I will start looking for short opportunities. But I'm still in the camp that it's definitely a possibility. One last stock to take a look at is going to be Google. I really like this setup here in Google. We talk about triple confluence quite a bit. What you'll notice is this trend line that dates back to March of 2023, acted as support in September of 2024, had some support in March of 2025, bounce, breakdown, now holding the breakdown. For the most part, this trend line is now resistance. So you have 1 point of resistance there. You have the 50% retracement as resistance as well. And then you are also within a bear flag pattern. So two major stocks, Google and Nvidia, both showing, some pretty serious reversal patterns. Google with the bear flag and Nvidia with the head and shoulders. Will this play out while there's a ton of optimism running within this market is the big question. If you're looking for more content like this, please check us out on Trading Analytix. I will be posting a week ahead video this week, and please follow along with that. I'm going to go ahead and pass on back to Blake. Thank you all so much. Cheers.
All right, Nick, thank you very much. And I hope you guys enjoyed your time with Nick. And since the stock market, just before we were done filming, the stock market had sold off a little bit, and we saw a little bit of a sell-off and a reversal. It's actually just kind of bouncing back here after probing some stops. So getting people excited but not excited. It's a Friday. It's end of the month. You're going to see a lot of that type of volatility. But I want to continue on, and I want to talk a little bit about the S&P because we will discuss this in our review section. But last week we were looking for a dip down to 5,500. I still think that's major support in the S&P. Any dip towards 5,500 or this 38% retracement, it's going to be great. However, you try to think about how we're going to get there. Well, what happened this week is we had a false breakout, or you can call it a double top. So if we come down and break through this support, you ask the question, how would we get to 5,500? Well, the measured move of a double top would take us to about 5,500. So if you want to know where a breakdown in the S&P is going to take us, it's going to take us basically to that 38% retracement. That's probably going to be a level that you need to be looking at for buyers. Now, one of the other things I wanted to cover this week before I get into the review portion, I do want to talk, and I am going to come to Bitcoin, so don't worry about that. I'm going to talk about crypto. I'm going to talk about gold. Okay, gold, and I'm gonna draw for you something the way I'm looking at this now, near term. Okay, this is what we would call. Let me just get the top of that. This is a triangle pattern, guys. If you haven't seen it, this is a triangle consolidation at all-time highs. So if you think that gold is finished going up, I'd agree with you if we break this level here. But when you rally and then you stop and pause at all-time highs, that suggests to me that there's still room to go higher. And look, I am not long gold, but I sure as hell wouldn't want to be short gold. I have every talking point in the world to be long gold. I don't have any reason not to be long gold. It's scary when that happens, but that's been happening for the last 4,000 points. You can say positioning is so extreme, everybody's long. How can we buy it after going? Things can go in the market, things can go a lot higher than you believe or a lot lower than you believe. The market can stay crazy longer than you can stay solvent, as famously quoted. So just remember, gold, there's no reason to be a seller right now. I don't have any real macro reason to sell it. And technically, we're just consolidating at or near an all-time highs. Give me a reason to sell it, and then I'll sell it. But gold's still very, very bullish. I do want to talk about the bond market because everybody's very bearish to the bond market. Everybody's very bearish to the fixed income market. But if you look at the ZNs, or you can look at the ZBs, the 30-year, ZB, sorry. Here's the 30-year. Everybody looks at this longer term, these longer term fixed income products, and they're like, oh my gosh, it's so bearish and it's going to break down. Yeah, we're in a bearish trend, but yields are also at pretty attractive levels. Now, we could argue that because our twin deficits continue to grow, and globally everybody's spending money, that bond market vigilantes are going to demand more yield, so they're going to sell bonds to demand more yield. Yes, that is very much a risk that this trend stays entrenched lower. But that doesn't mean that we can't get a bounce before we head lower. And in this case, what you've just seen is you've seen a move higher in the bond market over the last couple of weeks. This is bonds, not the notes. This is bonds. This is our 30-year. You've seen a bounce in the 30-year bond market, and if the bounce continues, yields continue to come down. How's that going to affect the market? And is this the way the market's telling you? I'm not really worried about it right now. Now we start breaking through this teal line, things will be probably a little crazier, in my opinion. All right, this is the point of the video that I do want to mention I want to talk about the 3 trade setups of the week. I want to review the 3 trade setups of last week. And remember, if you like these videos and you think they're very beneficial, make sure you give me a thumbs up, subscribe to the channel, comment down below, and I've been going on and on and on and on. So now it's time to go on just a wee bit more. This is the part that most of you have been waiting for. All right, so let's talk about and let's review the 3 setups from last week. So the first setup of last week was long pound dollar while above 134.40. Well, if you would have bought it, you could probably played it a bunch of times above 134.40. Is it still above 134.40, the big breakout point? It is, barely. But at this point in time, you have to count it as a win. It's above 34.40 and it continued to rally and you played it on the long side, it's still a win. right? So trade setup number 1 worked. I'm still long sterling, so I've played it long, shedding off profit. If you guys want to know what I'm doing, all you have to do is come here to the trades room, and then you can just keep scrolling back. You want to see my open positions? You can see them. You want to see when I'm closing out positions? Oh, you can go right over here and say, oh, he closed this out, and then he got long some of this, then he got out some of that. You can follow everything that I'm doing tick for tick at the time that I'm doing it. I usually post those within a couple of seconds of the time that I got in or got out. So, and screenshots. So, cable, long, while it's above 134.40, it still is above 134.40, at least for the next 30 minutes. Long S&P at 5,500 with a tight stop. That was trade number 2. That didn't happen. It's not that it wouldn't happen or can happen. It just didn't happen. As I mentioned to you guys, every single week, what I do is I try to buy things. I try to set up things. And if they come to fruition, great. The trade setup, some of them, they don't happen. And that was an example. The S&P did not make its way down to 5,500. If it gets down to 5,500, you guys know the drill. It's probably playable there at the 5,500 level still. But can we get there now? Did I show you the pathway of us on how we could get there? I did. All right. Trade setup number 3. Buy VIX calls while below 24. So this was last week, or no, this was last week, Thursday, Friday. Okay. Came down below 24. Well, if you would have bought it on Monday, let's just say you would have bought it on Monday, you would have bought it right at 21 at the open, or on Tuesday because it was a long weekend. And you have it right now. Nah, you're losing money. But like I said, I think the VIX, this is a play for the weeks ahead. But still, if you would have bought it on Monday or Tuesday and you're looking today, you lost money, right? So that's it. So made money on one, lost money on one. One of them didn't happen. All right. One for 3, one for 2, one for 2, right? Yeah, that's trading, right? And if you guys want to know how close that is in trading, this is our close patterns in play over 8 years. Over 8 years, we have had, between the team, not just me, it's the team. You could go through all of them. We've had, and you can see our active patterns in play right now. We've had, how many? Number of patterns in play. 2,024 patterns in play. The winning pip percentage, 53% wins. 47% losses. So 50%, it's all about risk management. Oh, it's all about risk management. Oh, it's all about risk management. The average risk reward is 3 to 1. So you wonder how we get the percentage returns that we get? You can go through them all. Every single one, if you want to. You can see we go back 203 pages of patterns in play. All right, that's been historically since we started. Now, before I get into the top 3 trade setups of this week, one thing I should mention is if you want to take advantage of this volatility, check out the Trader Funding Program. You can get instant funding or one-step assessments. Watch the video right here. This video, it's brand new. I just filmed it like literally 2 weeks ago. Watch this video so you can figure out, oh, hey, I need to get some more trading capital, or I don't want to risk my own money. I want to trade somebody else's money. Watch that video. You could get instant funding like that. Or you can take a one-step assessment, which is a simple step. Sorry, my team messages here. It's not a complicated process to get funded, unlike other companies. Plus, you get involved in the ForexAnalytix community with us. You can see the trades room. You can get ForexAnalytix, the platform. You can be chatting with me 15 hours a day if you want, because we want you in our community, because we want you to become successful. So check out the Trader Funding Program when you get a chance. All right, what are the 3 trade setups for today? First one, Euro dollar above 113.90. Okay, above 113.90. That trend line right there, I'm looking to be on the long side to play it till 114.75. Now your question is, why are you picking on 114.75? Because $114.75 is right in between the 78% retracement of this entire move and the 127% extension of this move. It's going to put you right here. So this is a pure breakout momentum play. If we break above this trend line, here, we're going right to this level. Trade setup number one. Trade setup number two. Long New Zealand dollar on wedge support. Where's wedge support, you ask? Well, I'm looking to buy the Kiwi dollar on wedge support and looking for a move higher to 60.30, or I'm looking for a breakout. If we miss it and it just doesn't happen, I'm looking for a breakout above 60.30. And if you don't know why I'm bullish the Kiwi dollar, you should probably go see what the RBNZ did this last week. All right. And I know that this is the 618 retracement. I understand that. But I don't care. This is wound up enough and long enough that I think the breakout is going to be a breakout past the 618. Last but not least, trade setup number three, shorting Bitcoin. And I'm looking to short Bitcoin because we have now, I'm going to do a little bit of drawing here for you guys. I don't want to delete everything, but I do. Not delete everything, but I want to delete a few things. Delete this, and we can leave it like, let's get rid of this. And we're going to remove that. Let's remove that for a second. Actually, you know what? I'm going to keep that. And I'm going to draw this out. And you would know that existed if you are looking at the Bitcoin basic technical analysis and you go, oh, that's the channel Blake's talking about. That's the channel that they've been referencing, over the last couple of sessions, right? Oh, okay, great. You had already known this trade setup, but notice how we're breaking down. All right, so a break below 104,000, which we're actually doing as we speak. I wrote my notes from earlier this morning. A break below 104,000, which is right basically here. A break below 104,000 targets 97,500, which is right here. And this is actually in process, and it started happening before, well, it started. I made these notes a couple hours ago, so it's starting to happen already as we speak. So I hope you have enjoyed this week ahead video. I hope you've gained a lot from it, and if you have, make sure you give me a thumbs up and subscribe to the channel. It's free to subscribe to this channel so you don't miss any of these videos to get you prepared for the week. And comment down below if you like these videos. I really appreciate that. And also, guys, I want to thank you for spending your time with me. I know this is the weekend. It's the weekend, and you're spending your time with me watching this video. So thank you so much for doing that. My name is Blake Morrow. I'll see you on the Monday morning Face Show. It's a free show that you can attend, and you'll catch me there every day. I'll see you guys then. Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.